Welcome to Momentum Monday. Today is April 7, 2024. We'll take a quick look at the markets. The Fed keeps saying that inflation is slowing down and it still intends to cut 75 basis points later this year, but the market doesn't seem to believe it, at least the inflation part. The market doesn't believe that inflation is really going in the right direction towards the 2% target that the Fed has. But in the meantime, the market also knows that the Fed might need to cut rates because of rising government expenses. Like interest rates currently is over $1 trillion a year, just the interest on the debt, and also it's election year. So basically the market knows that the Fed has painted itself in a corner, that they have to might have to cut rates during times when inflation might be picking up slightly again. Why I'm saying this is just look at the price action in energy and basic materials. I mean, basic materials, here is a monthly chart. They just had a breakout from a pretty significant base, like a 3-year base here. And anything really basic material related, especially metals, has been on absolute fire. Everyone knows about a big breakout in gold. That's like a 10-year base. It broke out and it didn't look back. It went up about 13% in a couple months, less than a couple months, like 5 weeks. Here's a weekly perspective. Typical bullish behavior, breakouts, go up for 2 weeks, then 2 weeks of sideways consolidation, then another breakout. As I said, GLD went up 13% since this breakout here, but it hasn't really been the best instrument to participate in this trend unless you probably own futures or you tried some short-term options. I tried with some options, but I also own GDXU, which for the same time that GLD is up 13%, GDXU is up 100%. So it's really important to pick the right vehicles to play industry trends. And GDXU is just 3 times leveraged gold miners ETF. But either way, as I was saying, it's not just gold. Silver is also breaking out, trying to catch up. Similar price action, a move higher, a leg higher, then a couple weeks of tight range consolidation, then another huge breakout last week. I mean, this is a pretty significant breakout. SLV and also the silver miners are also trying to catch up. But also the other metal companies like Copper's just setting up for a breakout from a huge base. Here's FCX, which I think is probably the best way to play it, plus they own gold as well. Also a big base, and it's been rallying for a while. Aluminum also on fire, probably AA is not the best, but Century Aluminum, big breakout here, up quick 25% in a few weeks. What else? That the Chinese company, not Chinese, Canadian company, Tex Resources, also setting up for a breakout from a very long base. I mean, they own copper, coal, zinc, molybdenum, gold, a bunch of important metals. And it's not just basic materials. Also, everyone knows about energy. Energy is basically the second best performing sector year to date outside of semiconductors. Big breakout in XLE. I mean, oil stocks have been on absolute fire. Like my go-to play when I swing trade oil is just WTIU. I mean, it's not the most liquid, but it's definitely moving the fastest when oil goes up. So as I said, yeah, energy is super strong. I mean, as you can see here, straight up, and obviously this has implications about markets' expectations about inflation. Outside of basic materials, the price action has been a little bit choppy. Volatility has picked up lately. I mean, you can really see it on this chart. So volatility has picked up, and then what we're seeing is that a lot of many breakouts, especially in tech, haven't really followed through. There's been a range-bound action, like breakdowns are also not really following through. So range-bound action just frustrating people that are just chasing breakouts and breakdowns in tech. And last week we saw like a pretty quick, significant sell-off on Thursday when one of the non-voting Fed members, Kashkari, made a comment that maybe the Fed doesn't need to cut rates this year, and the market just didn't like it. Obviously, the market has priced in some rate cuts this year, and if this doesn't happen, we're going to see a probably 10-15% correction at some point this year if it doesn't happen. So either way, the QQQ pulled back to the rising to its rising 50-day moving average, where it immediately found support and it bounced. So this is a really important level here. I'm thinking that if Friday's lows, Thursday lows are lost at some point, we'll probably see a pullback towards 420, even 410. And here I pulled up a chart of the QQQ with their year-to-date VWAP. Since it's a really important level, I mean, the year-to-date VWAP currently is about 430. So I'm thinking probably the next level of potential technical support is around 430. So if this level here is lost, 436, 435, we'll probably see a quick flush to 430, 429, where buyers are likely to step up again. And then if this level doesn't hold, we might see a bigger drop, maybe to 410. Okay, let's go back to the market search chart platform. So to say, yeah, a lot of fake breakouts and breakdowns. Here's one example. NTNX tried to break out a couple weeks ago. It was slammed down to its rising 50-day, where it bounced. It's locked in a range between 60 and 66 roughly. But as you can see, buying the dips in those strong tech stocks has worked a lot better than chasing breakout. So you need to notice that if your tech stocks are your go-to trading stocks in this market environment. A couple other themes, and obviously I wanted to mention that last week we saw some breakout attempts in some of the mega caps like Meta, Amazon, try to break out. I don't really expect them to have a significant follow through in a range bound environment. What else? So let's take a quick look at the chart of the 10-year yield, and it's been slowly making higher lows and higher highs. So that means that the market inflation expectations are slowly rising, and this is not good news for small caps, because small caps have literally been almost 100% negatively correlated to interest rates. So when interest rates go up, small caps are having issues. Small caps and biotechs are having issues. And as we saw here, this is a failed breakout attempt in IWM, Russell 2000, and then a pullback toward its 50-day moving average, where it's finding some support. So this is the same story as in the QQQ, as in most tech stocks. Breakouts are not following through, breakdowns are not following through, but buying pullbacks in stocks in an uptrend, like near the 50-day moving average, has been working a lot better. You know, a place where you can just risk 2 to 4% and then potentially make 10-20%. Pretty good risk to reward ratio if you can pick up some of those strong stocks. near the rising 50-day moving average. People are talking about the potential of a new war, especially considering the price action in oil. I mean, Brent crude oil is just close to $100. It's been straight up in the past few weeks. Like, I think one of my indicators that I watch is just that defense ETF DFEN, which also is kind of setting up. So it's something that it's good to keep an eye on. I mean, it's not the most liquid, but it's an easy way to participate in the industry if you want exposure. I think there was one more thing I wanted to cover. There was a new fund that kind of in a way IPO'd last week or the week before, DXYZ. It's the Destiny Tech 100 Fund. It's a closed-end fund investing in a portfolio of 100 or so of the top venture-backed private technology companies. I mean, I mentioned it right here on Wednesday during the week, and little did I know that this thing would triple in the next 2 days. It's just an amazing trading vehicles because currently it is the only way for public investors to participate in some of the major private companies. And here's the fund website that I pulled up. I have zero affiliation with them. I'm just showing it for strictly from a trading potential perspective. As you can see, this is a ticker, pretty hefty annual management fee, 2.5%. They currently have a portfolio of 23 companies. They want to reach 100 companies. And these companies are basically who of who top private companies that will eventually go public. As you can see, their portfolio here, I mean, 1/3 is in SpaceX, the only way to really participate in SpaceX. And then you have a bunch of others. They're also pretty popular: Axiom Space, Boom, Supersonic, Epic Games, Brex, but also OpenAI. So Stripe and so forth. So they've really invested in some major private companies that will eventually go public. So for me, as of right now, this is the only way to really participate in those private companies. That doesn't mean that you should chase it here because it's super extended, and that means you're paying a very high valuation for those companies. But for me, this is kind of the new pre-IPO index. You know how we're following IPO because they buy every company that goes public, and it's done relatively well in the past year and a half. But for me, this will be a new one to watch and trade, DXYZ. All right, I think that's all for this week. Hope you have a great week. See you next week.